Warren Buffett recently sold $6 billion worth of his stock holdings. Michael Burry, an investor notorious for calling the 2008 financial crisis, also reportedly cut out a big chunk of his portfolio recently. Something called the corporate insider sell-to-buy ratio is currently showing the highest level of corporate insider selling since late 2021, a moment when billionaire CEOs and investors were selling their stocks at all-time highs. Bill Gates, Jeff Bezos, Elon Musk were all recorded having sold a record amount of their holdings in late 2021, right as the stock market was making a significant peak before a 25% drawdown in 2022. Today, as corporate insider selling is reaching elevated levels and renowned investors are flipping bearish on the market, we see that a record number of retail investors are actually becoming bullish on the market today. This is an indicator called the AAII survey, and it basically asks investors whether they're bullish on the market over the next 6 months. And this line that you see here is the average of the last 50 days of investor sentiment. Now you can see the last few times that we saw retail investor sentiment this elevated coincided pretty nicely with some large peaks in the stock market that were followed by considerable market drawdowns, not to mention that this reading right here marked the onset of the 2008 bear market. This is significantly different to the investor sentiment that we had in late 2022. Back here, people thought a recession was absolutely inevitable, and that although the stock market was already down 25% from its peak, most investors believed that there was a lot more downside to come in the market. When we were telling our clients to buy stocks with both hands for the long run in late 2022, people were calling us completely crazy. Some of our clients even unsubscribed from our service because they didn't agree with our view on the market. Today, following an absolutely massive rally on the stock market and much more expensive valuations, all of a sudden people can't seem to think of a reason why stocks could go down. So is now the time to start getting contrarian and sell this excessively bullish market? By the way, if you want full access to our entire trading and investment strategy, we post research explainer videos 3 times a week and all of the buy and sell alerts for the trades that we like. So far in 2024, we've had an amazing run, and although we cannot guarantee that will continue in the future, we're going to do everything we can to make sure that that's going to be the case. Now, before some of you start to go leveraged short on the market just because of this chart, I do want to say that this is not a perfect market timing tool. This extreme reading that we got occurred in August of 2021. The stock market didn't peak until January of 2022. Going back to the financial crisis, we see that investor sentiment was already quite bullish in July of 2006. The stock market didn't peak until October of 2007. So the reality is that you can have a retail investor sentiment stay quite bullish for almost a full year before the market actually makes a peak. These readings are really a better indication for longer term investors that want to know when they're getting a good deal for selling their stocks or for buying stocks at cheaper prices. Today, although we have a long-term sell signal for these kinds of investors, we do have evidence that short-term smart money is going long on the market. This is a chart that shows us something called the OEX open interest ratio. And over the last 20 years, these OEX traders have had a pretty good track record of timing the market. When this line is elevated, it means that they're going short on the market. And you can see that they've timed a lot of market peaks very accurately. And when this ratio is low, it means that they're going long on the market. And when they do that, it usually means that the stock market is bottoming and about to make a significant rally. And so today, believe it or not, OEX traders are extremely long on the market right now. The most aggressively long since March of 2009 at the very bottom of the bear market. Now, I want to be clear, we don't purely rely on this indicator to make our decisions at Game of Trades. But if our work aligns with what these traders are doing, that adds to our confidence level. One chart that we've been showing our clients over the last few months is this one right here. It's the NYSE Advanced Decline line. And it shows us the number of stocks that are going up or down on the New York Stock Exchange. You can see what's been happening over the last few months is we've seen a record amount of stocks moving higher, while the stock market itself was in a period of consolidation. This is why our bias has been that the market would break out to all-time highs instead of rolling over. Now, how long is this breakout actually going to last? That's a good question. The goal of this channel is to provide clear-cut analysis that actually helps you guys stay on the right side of the market across all types of environments. So we'll continue to watch the data very closely to understand if we should be changing our opinion. You can follow our entire trading strategy at bravosresearch.com.